If you have a VA loan right now, and you're in one of those 3, 4, even 5% interest rates, your house just became more valuable as a result of your loan product. All right, Anthony, VA loans. First, what is a VA loan?
VA loan is a special loan that's designated for members of the armed service that have kind of served our country. It's a thank you, if you will, from the government and from the Veterans Department of Affairs.
Yeah, so it's a loan product underwritten by the government. Correct, right? Yeah, so what are advantages of the VA loans? Because a lot of people think VA, oh, well, that goes conventional FHA and VAs at the bottom, uneducated, right? But the truth is what?
Actually, VA loans are the best possible loan that you can accept. There's multiple reasons why. First, it's a zero down payment approach. As the seller, if you're accepting this offer, you're honoring the veteran that served our country. They're able to go and provide that without a lot of out-of-pocket costs with that zero down payment.
Yeah, just because it's zero down doesn't mean they don't have the money.
Correct.
Right?
Yes.
It's just they need to only put zero down because the government's allowing them to do that.
Correct.
What else?
Competitive interest rates. So like you were saying, Joe, with that maybe uneducated tier approach to what loan's the best to take, what we've been seeing is actually VA loans are more competitive. You're seeing a little bit of a lower interest rate more times than not than your standard conventional loan.
Yeah, so if they have a lower interest rate, they actually have more buying power.
Yeah, and less out of pocket, so they have more cash as well.
Correct. Yep. What would you say another one?
There's limits placed on closing costs. So that's also going to benefit you on the back end of the deal when you're going to close, less out-of-pocket costs for that veteran as well.
Yep. Also, what else?
No PMI, no private mortgage insurance. Huge savings there as well.
Yeah. So PMI applies to loans that have less than 20% down. The private mortgage insurance, because the bank takes on more risk, you need to pay a separate policy called the private mortgage insurance. That helps hedge that you're putting less down, because less down typically means a higher default rate. Higher default rate causes you to take on additional insurance because it's underwritten by the government. And the government's essentially backing this loan. You don't have to carry the PMI. So it's a huge benefit to that VA buyer. So not only is their interest rate less, but their PMI is less, allowing for a higher purchasing power because of both of those things. So yes. VA's a phenomenal product. What else?
Kind of put these two together. We've got relaxed credit requirements. So there's no set limit on the credit score. There's no minimum requirement. It's based individually on that veteran's financial kind of story in that means that, and with that, less stringent on the debt to income ratio. So the buyability for that veteran is going to be a lot easier to do, as well as what we've talked about, lowering the cost in order to buy that home.
Yeah, so that buyer doesn't have to fit in a box.
Correct.
Right? They can massage the loan as long as it makes sense on a case-by-case basis. They can get something through that maybe they couldn't in other things where it's either box check or box not check, right?
Correct.
Which is huge. It's huge. What else?
Personal favorite about VA loans, especially when you're on the buy side and you're working to transact with that listing side, is Tidewater. What I mean by that is post-appraisal. If there's anything that occurs, let's say the value comes in slightly below the list price or what the contract says on the purchase agreement, as well as if there's any kind of work items that may need to be done, there's an opportunity here to work with, and again, with the VA loan specialist or the appraiser to provide more details, do a comprehensive analysis to try to justify the price. Where if you're going and working in the same capacity with an FHA appraiser, you're actually contesting what they've come up with. So it's a partnership. They want to get to the end finish line with you, and you're able to provide that information to help your buyer out as well.
Yeah, so in an FHA loan, we're saying you're wrong.
Correct.
In a VA loan, the appraiser's asking for help.
Yes.
Help me understand how you got here.
Correct.
Where an FHA loan, we have to say, no, you're wrong, and we want you to fix it.
Yes.
Right? Or conventional. Big difference.
Big, huge difference.
One's already made a decision. The other one's asking for help to get to the decision.
Correct.
Right? It couldn't be any different and more beneficial to the VA side. Right? What else?
Lastly, and again, there's more benefits, but the last one to really highlight here is that the loan is fully assumable, not just for veterans, but also for civilians. So if you're going to sell your home and a civilian wants to buy out the loan, they can assume that mortgage and pay off the remainder.
Yeah,
cash.
so if you have a VA loan right now, and you're in one of those 3, 4, even 5% interest rates, your house just became more valuable as a result of your loan product.
Yes, correct.
So your house became, say it again, your house became more valuable as a result of your loan product, because that allows the new buyer to assume your mortgage at a considerably lower interest rate than what they could get on the market today, giving them more buying power, giving them, people who have means, the opportunity to really get something for lower than what they would have to on the monthly, even if they have to bring more cash to the table as a result, because they make up the difference, right? So VA is a phenomenal product. If you qualify for a VA loan, reach out. If you're currently in a home that has a VA loan, reach out. We'd love to help you and work through this process with you.
Thank you.